We don't.
There we go.
Good morning, everybody. Stay here again. Monday morning.
We sell it.
We call the meeting to order. First order of business are the minutes from October 20th. Everybody reviewed the minutes?
Yeah.
Motion to approve.
Motion to approve. Can I get a second?
Second.
Second, all in favor?
Aye.
Portfolio dashboard.
Thank you. We have two clients on the dashboard this month, and I think the committee is familiar with loan client A. I left a message for Brian Stickles on Friday to discuss this loan. I haven't heard back from him yet. Loan client B, there was supposed to have been a meeting of creditors on Monday, November 10th, and that was postponed. We don't have a new date yet.
That's about what you can.
Happy to entertain any questions. Okay.
All right, so let's move on to the loan request. We
So
start.
we need to
Oh,
approve.
sorry.
I'll make a motion to approve.
I'll second.
Okay.
All in favor?
Aye.
Opposition? All right, let's move on to the Cafe Month.
All right, so good morning, everybody.
Horse.
Yeah, this Cafe Mutton, restaurant located here in Hudson. They are seeking a $40,000 loan that will split between our two loan funds across 72 months with a monthly payment of $696.46. Interest rate, of course, of 7.75%. Purpose of the loan being equipment and supply purchases with some working capital and our collateral, a lien on business assets and personal guaranteed principal. This is Cafe Mutton, located right here across the street from us.
So it's not a different business, the Cafe Mutton, that's their official name?
That is their official,
Oh.
their Flying Horsey Fruitcake Company
Oh, okay.
doing business as.
And they still have
They
a
do.
loan with us, and this is a new loan? Yeah.
Loan to
this is the second.
expand.
Okay. So does it add on to the existing one?
This will be a new loan.
A separate loan?
They'll actually have 4 loans with us at this point.
And they aggregate. Roughly,
Say that again.
they aggregate,
70,000?
Just under 70, but
so they're still within. A range of what we would, the top end of the range that we would normally.
Okay.
Correct.
Yeah, they've been around 2 years. They're doing really well. I will ask the same question I always ask about lease term. I'd love to see some of that down there just to make sure.
Yeah.
New leasehold is that. Doesn't.
So originally she
expire
offered
during-
a 1-year lease for this
Yeah.
new space, and because he has the building on the market and he feels the landlord that he's charging her too little, but he was willing to go to 3 years, I
I think
think.
it was 3.
So there's risk there. 3 years, or he sells the building, new landlord doubles the rent.
Well, let me think about it. The new lease goes through 2029, I
I
thought.
believe so. We can look at that,
Okay.
get more specifics.
Yeah, we told her we wanted it to be as long, at least a
At
5-year.
least that she has an option. to renew.
Exactly, I think it does expire in 2029.
I don't know if we have a policy around that, but with the way.
Yeah, we certainly.
Real estate has been doing
Landlord
that,
Jeff,
yeah.
this is real quick.
I agree.
But other than that, I like it.
Yeah, I'm okay with it. Motion to approve.
I'll second. All in favor?
Aye.
Opposition?
You wanted,
Gotcha, and this brings us now to the Dirty Dog Farm LLC, an agribusiness located in Claremont. Their request of us is $100,000 that we will be blending between our two loan funds, of course, but with separate interest rates between the two. We're bringing in a monthly payment of just under $1,500 a month. So the SBA loan at 72 months at 7.75%. And the CEDC loan, a 96-month note at 5.75% interest. Again, that blended interest rate. We're also offering a deferment of 90 days on the CEDC loan. Purchase of their loan request is to purchase materials and equipment. Our collateral being a lien on business assets, personal guarantee of principals, plus an additional guarantor. This is Dirty Dog Farm in Claremont.
I had a question about their projections, because I I was just confused as to, like, they obviously have a lot of followers. I know because I've seen it on social media, they've been looking for additional land. I don't know if they got it, and so I was wondering, is there a projection based on that additional land that they're farming?
Yeah,
Did
they,
they
they
get
have,
land?
they have acquired via, I believe, lease,
They're
additional
leasing.
land with capacity to substantially increase the size of the herd.
So the
And be-
projection's based on that.
Yes.
And then I was just wondering, because it sounded like everything was direct to consumer, if they were interested or pursued having supplied to like a local restaurant. I know we've helped a local beef farm supply, because it's a considerable amount of revenue to have a solid revenue base with a restaurant.
I don't think they're gonna pursue it in a big way at this
Yeah.
point. They have a couple of commercial clients, but they're really doing well with that.
They want the direct to
They do.
consumer.
It's an amazing model. When, you know, they give you the freezer and they sell you the
Yeah,
package and they, what, 1,000,001 in sales?
it just takes a lot to convert.
Yeah,
Their conversion takes a lot more
Yeah.
than your usual, so that, I don't know if there's a ceiling on what they do.
I had a,
That's, I was concerned about.
yeah, my questions were around the jump from 24 to 25, so how much of that, I know it's projected, but we're also 10 months into the year, so how much of that projection is based on actual numbers? Are we just projecting the last 2 months, or was this projection done a year ago?
No, they just did the projection.
Okay, so we're based on 9 months, so how did they triple their revenue
Right.
and also lose money?
Right. So so they've been trying to determine what is the most efficient way, you know, to whether to birth a cattle and raise it from birth, and it takes 2 years, I think, to finish it, or to buy it after it's a year
Yeah.
old, and in some cases, they buy them at 2 years old and just finish them.
Mhm.
So they've been doing very well. I can't remember with one of the models, I think just finishing it. But it takes 2 years, you know, to grow a cow. And so they've been trying to figure that out, and they have been doing better this year, but they still have a waiting list. Still have a waiting list, but that is the reason they leased the additional land.
Yeah, I was having a hard time with this write-up, drawing a line from where they were to, 520,000, 24 to 2.8 million in 2026.
Yeah, it's a big jump.
It is big time.
Also, why is our rate lower on the CEDC loan?
So we've done this before, that we've done loans over $50,000. And you may recall, we have a loan to Mario's, that was for the same dollar amount, and the entire amount was at 5.75. But we thought we'd keep our SBA loan where it is, 7 3/4. We pay interest on that, as you know. On the CEDC loan fund, we don't pay interest, that's our money, and so we decided to lower it and give them a blended rate of, a more attractive amount. This assumes we get the additional guarantor, we're still waiting for his.
Yeah, I was gonna ask about that guarantor.
He's a known quantity, he's had another loan with us before, paid it in full, very responsible and significant number of assets.
And the other question I have is, we're providing a loan to improve a property that they own. Is it possible to get a mortgage or $100,000?
If we didn't have the guarantor, we certainly would insist on that. The land is actually owned by a family trust. And it's the father of one of the principals who is the additional guarantor.
I guess we have to move this to the board to formally approve, correct?
Correct.
So all we're doing today is asking.
so we can get the answer on the 2025 year-to-date numbers for your, with respect to this, in advance of the board meeting.
Yeah, I think that would be interesting. Information on that additional guarantor. I think without knowing who that is, what, their resources are, it's hard to really put much weight in that.
We have a tax return from his previous loan, and we also have a personal financial statement from the previous loan, and
It's the father of Schwab, I'm guessing, right, Schwab Farm.
correct.
I still would like to get a mortgage on it. Just the size of the dollar amount, that they would within the property.
Or to your point, do they have do they have the lease for the new farmland?
They do,
Yeah.
we're putting up a hoop farm essentially. I'm not, it's not a major improvement to the property. It can be disassembled and sold.
The third of the town.
Yeah, correct, who's doing that?
Well, if we have a mortgage on the property, then I'm not sure we would need an additional guarantor, but we can discuss that.
Possibly, yeah.
Well, and in a case like this, if there was some opportunity that they had, to do something that they would need us to subordinate, they could pay us off. And I mean, the land's gonna be worth a lot more than the total mortgage.
I would think so, yeah. It's a stow driver's seat.
Yeah, just make sure we get taken care of as part of any future transaction.
Cause like, as a growing business like this, I could see them just taking a lot more debt aside from ours, like whatever they get. Pretty big goal.
Do we know how long the lease is for the land, the new lease?
I don't recall the number though.
I don't know.
Okay. But we could.
We can look into that.
Look into. So with the things that they're looking into, I'm okay giving a motion to approve.
I'll second it. Well, we're formally approving it at the board, right? Right now. We're
Yeah.
Approving, right, to move it to the board. So I think we still have some more questions to answer, so I'll second
Gary, Rachel, you're in favor?
Yes.
Okay.
What?
Yeah, when we sent out the loan request, the confidential loan request, we were working with $60,000. She wants to keep it at $50,000. We heard back from her on Friday. And so it will be a $30,000 SBA microloan, a $20,000 CEDC loan, interest rate of 7 3/4, and this is for equipment purchases and working capital, and we'll have a lien on business assets and a personal guarantee of the principal, but we will be in second position on the assets. There is, the SBA will be ahead of us with their DVD.
it. Yeah, 20 years is impressive. Your cash flow's strong too.
I know people really like that, the restaurant there. And they do a lot of catering and stuff, on a lot of different things.
So it's a winner. I'll make a
No.
motion.
Yeah, I'll make second.
All in favor?
They actually catered my cousin's whole wedding.
They do a lot.
It was nice, yeah.
So this is our third restaurant for this month.
Awesome restaurant.
Host Grill, located in Hudson. It's a restaurant. The loan request is for $50,000. We're splitting it between the two loan funds, 7 3/4. And the purpose is equipment, inventory purchases, and working capital. We will have a first lien on business assets and the personal guarantee of the principal.
Where's this located?
Going to be in the building right on the corner. Yep.
Oh, okay.
Oh, in the new Gallery building?
No,
Oh,
in-
no. Just said, I was thinking
Place in Columbia.
Park Place in Columbia.
By the park.
Oh, the,
Yeah, oh, the corner there, where you
Yeah.
just sold the great pizza,
Yes.
it was Billy's
Yeah.
Thai Market, yeah, cause when I put in the address, it took me to like the alley there. I was sure.
Yeah, you know, that's his architect already. I don't know if they started the.
Who did the projections on this?
Brian's
Brian.
eye.
Alright, I have a lot of issues here.
I
So
don't have those in front of me.
we just presented two restaurants who have both been in business for a while, both highly regarded, both really great. They're averaging 12-13% profit margin. Which is what I would expect. These projections project 39%. That is irrational. In the projections for payroll, he put $39,000 for the year. But when they broke out the positions they needed, I did the quick math.
He's not gonna be able to fill
Like,
like positions.
$5,500 a week is what you need, or $4,000, $4,300 a week just looking at what he had there. And I think that's a little low.
I think
So we're ludicrously off on the payroll. I,
I think he's starting out doing takeout only. He's only gonna have a couple of tables in there, so it really is gonna be more of a takeout restaurant, but even then.
but even what they're putting here doesn't even remotely line up with the projections. It's for the annual.
Yeah, we certainly did.
You're talking 200,000 versus 39,000.
Yeah.
There's no restaurant in the world that makes 39%.
He's, yeah, I think it is overly optimistic and we were a little surprised too, but Brian felt fairly confident with these numbers. You know, he and his partner are gonna be working probably for next to nothing, but you're right, he's gotta have something more built in there for staff.
I'm not in favor,
It's
but
tough.
I'll open it up. to the group.
Yeah, are they willing to go back and take a look at the numbers and adjust it or no?
He absolutely will, I mean, we can tell him he has no choice.
Just the positions that they're listing that they need doesn't add up.
Yeah.
You know, the insurance I thought was, I have a friend that just opened a restaurant, I think $18,000 a year for insurance. They're projecting $2,900. Have they actually got quotes on that?
He says he's gotten quotes on
That's
everything.
Less than I paid for my car insurance. Like,
Yeah.
it
Doesn't make sense.
He has run restaurants before, but in the city,
Wow.
you know, yeah.
I mean, they.
Was he the front of the house or the back of the house?
The,
Let's bring this back to Brian.
Do you rely on? Gotcha.
We have several client, you know, consultants that we work with.
Oh, okay.
It's also a lot of concentration, not only just restaurants, Hudson, even that lot, how many restaurants do we have, like?
Yeah.
I don't know, I think, you know, I have issues with the projection, and I think also we just have to think about portfolio concentration. And it's like very specific.
If we could represent it to the board in interest of time. And
Sure.
and at least get additional questions from them, if they're on,
Yeah.
if they want to table it, but just keep the dialogue going.
Sure.
I think so. Be the Debbie back, but I'll just do something.
Well, maybe you can get back to him and let him know that you feel that the projections are not in line with the industry standard.
Yeah, when you run restaurants, what's the profit margin at the end of the day?
Yeah, well, if
You're lucky,
the
you're
labor
lucky,
is looking at
if you're lucky, you take home a dime or every dollar.
Right.
That's just the reality.
Yeah. Yeah, we'll get him. We'll work with them. Maybe we'll have another consultant take a look at the projections.
And are they assuming that there's gonna be a lot of like DoorDash deliveries, like, is that? If it's takeout,
I honestly
is
don't
there a
know.
delivery model?
Yeah.
Just
That
for-
wasn't in their business.
But I mean, look, we're saying it's gonna create 6 FTEs.
Oh, yeah, over 3 years. I mean,
Yeah, so, I mean. The projections should reflect that.
Yeah.
Um,
Yeah, we'll go back to the drawing
That's
board on
all.
this one.
yeah,
He's, you know, his original location was gonna be in Catskill. He had a very different business plan. That fell through. He found this kind of last minute, and I think he did put the projections together in a bit of a hurry. It's a small space.
table that.
Yeah.
Okay. Any other matters to discuss?
But then could we go into executive session to discuss litigation?
Yeah, I'll make a motion to go into executive session.
I'll second.
Recording.
Here we are. You could tell Lisa, Mark.
Oh, yeah.
Oh, no, yeah, she can come in, but. We are waiting for the SBA to reimburse us for the September 30th quarter.
We have to resubmit it. Nothing that was submitted during the lockdown was accepted.
So the interest rates that you guys are able to give, are they, when you get like your funding, is it locked in for the whole year, or do they change like as interest rates change?
We get a reduced rate in the first year and then it's set for the remainder of the 10-year term.
Oh, okay.
But that's with the SBA. We can give up, what's the cap on the micro loan SBA interest rate?
5 points.
No,
2% over, or I'm sorry, 7.5% over our cost of funds.
Okay, yeah.
So
So-
like if interest rates drop dramatically now, would your new loans be subject to lower rates, or you're just?
it's up
locked?
to us, because
It's up to you.
the point is, if our cost of funds is 3%.
Yep.
And we can go to 10, and we're only at 7.5.
Right,
So, you know,
I just was.
we thought it was usurious to be charging people who were in this segment of the business population what they would allow us to charge.
The highest I recall, was 8% already.
Pursuit doesn't think it's user.
No, but, you know, we're
Yeah,
different.
no, I agree.
Yeah, they're,
I agree.
but it's but I do think that, yeah, I guess it's better than 18% on a credit card at
Oh,
10,
no,
but,
this is a home run for borrowers. If you look at the lending landscape of other, of the risks that we're taking. And, what their alternatives would be. This is an absolute home
Well,
run. I mean, a 7A loan, which would probably be the next step. In the,
food chain.
yeah, is like prime +3, so they're over 10%.
Yeah.
And a lot more rigmarole and significant closing costs.
I think it's interesting that we haven't,
This is less than a bank would charge for a similar risk profile, so.
think it's interesting, well, we looked at some years ago whether we use the CEDC loan fund, which, you know, has a common purpose with the SBA, but not as limited, to do mid-sized businesses that, but then we would be competing with the banks. Right, I mean, the Mario situation, they should have gone to their bank and got that loan, but they had done that with us before, and there was a quick turnaround, we had extra funding available. But and because we've had such a low loss rate, if you didn't, you would have to do some seasoned businesses to be sure that you're spreading your risk.
Blue chips.
Yeah, and, and it's surprising to me that, I guess people don't know what we really do and what we have available, that we're not getting more of, established businesses coming to us to get this cheap money, if you will.
Well, like the local 111 came to me first and, we loved it. I was ready to write it. Everything was good, but that collateral issue became an issue, and SBA had been subordinating the EIDLs pretty willingly. But when they requested it, SBA said, "Oh yeah, we'll subordinate it, but only if you pay us down by $100,000." And they were like, "That's not gonna happen." I said, "Go call Martha, like,
Yeah.
get it done over there."
Well, but there, you
It made
couldn't
sense.
do it, yeah.
Right, I couldn't do it, but I mean, it's a perfect example of like, it's a bankable transaction, it just hit a roadblock. And, the bank couldn't get comfortable without first position on collateral, so I said,
But
it's
take
perfect.
take your last $50,000 small business loan that you would have done in 24 hours with AI,
Mhm.
right? And we don't, if we started doing those, we'd be competing with you.
Right.
So, and there is a balance. If it's something that, either a bank would be uncomfortable with, then we have to have our radar up too. Because we might have the same, our credit staff, we're all good, but, you're more experienced. Great, any, philosophical questions or, Great,
Motion to adjourn?
Second. So move.
great,
Take care, everybody.
have a good
Thanks,
day.
everybody.